If there's one thing I love, it's portfolio reviews. Welcome to the Fiscal Philosophy YouTube channel, everyone. Today's portfolio review is of a certain individual on our Discord, Jordan, aka Stabulo. This person will actually be a guest tonight on the Cashflow Kings live show and be a part of a panel discussion on a particular stock. And you'll know what it is as soon as we get into the portfolio. So Jordan uses this platform called Etoro, which lets you look at various different stats about their portfolio, which is kind of cool. Shows the return rate, which, wow, 62.79% 2-year return. Wow. So I guess he's a genius stock picker who is much better than both the S&P 500 and Warren Buffett. He deserves a medal for that. As you know, if a stock goes up a lot, it means it's a great company and it's something you should buy. And if it goes down a lot, it means it's a bad company and it should be avoided. Now, I'm being sarcastic. This is sort of an inside joke from our Discord. By the way, make sure you join the Discord. The link is in the description. There are a few other stats available on eToro. It, of course, has your year-to-date return because nothing matters in this world more than your year-to-date returns, am I right? It also has information about how many times you've traded each individual stock and whether those were profitable or not. So basically, if you buy a stock and it immediately goes up after, it's considered a profitable trade. Now, let's look at the portfolio itself. As you can see, we're over 50% weighted into MPW. Wow. With the second highest position being PayPal at over 20%. This is a real man's cigar butt value portfolio, let me tell you what. And by the way, I say that because this is the guy that coined that phrase about me doing a particular method of investing. So, all right. First of all, I think it takes a lot of guts to have over 50% in MPW. I have a lot of MPW, so I definitely agree with him on having MPW in the portfolio. But wow, that is a lot. Just gonna say it, like, okay, he must have extremely high conviction. Now, his cost basis is a lot better than mine, so kudos to him for pretty much timing the bottom on that one. Assuming it doesn't go lower now, that is. Now, PayPal, similar thing. The basis he has in PayPal is pretty similar to mine, and it's fluctuating a little bit in this same area, but it's kind of more or less been flat for a while, with the occasional pullback, but then recovery. So that one, he didn't quite time the exact bottom, but still, he's not doing badly on PayPal. Certainly better than paying $300 a share, am I right? In terms of relative valuation, I actually agree that he should probably have the most concentration into MPW because it's probably the most undervalued out of any of the stocks that he's got. Whereas, PayPal probably is around second, although maybe BABA is more undervalued, but PayPal is perhaps less risky. I do actually think BABA was in his top 3 before, but he actually sold most of it in order to put more into MPW. He's got S&P Global as his current third position, which that's a solid company. It's probably not particularly undervalued at the moment, but since it's a solid company, there's a pretty solid chance that he'll get a solid return on it. And I wouldn't necessarily expect you to get a steep discount at any point in the near future on something like that. The kind of thing that would actually move that stock down would be the sort of event that you can't really count on happening, and so you're probably just better off DCAing into it in the long run. By time the event happens that would knock it down 15 or 20% on its price, well, you may have already, missed out on an additional 50% of gains by time something like that even happens, in which case you still would have been better off buying it today. Similar story with Visa and MasterCard on that. You pretty much, you're going to always pretty much be paying at least a little bit of a premium, except in very rare instances. Applied Materials, I believe, is a materials sciences company, and I think it's a vertical to a lot of other companies that he believes in long term. So I won't complain about that one. I don't know much about LRCK. Same goes for KLAC. Obviously, I agree with having some Baba. I have a bunch of Alibaba myself. I also have a lot of Paramount. I definitely think that there's untapped value there. And in the event of an acquisition, it's a good arbitrage play. But I also just think that there's a lot of shareholder value potential to be unlocked with Paramount. CVS is his smallest position, and this is a healthcare / retail company. They own Aetna, which is a major health insurance provider in the United States, and they also have their retail pharmacy business. They have their little pop-up stores inside of Target, which are pretty nice. I actually use one myself for any prescription fills or anything like that, vaccinations and the such. So yeah, that's a pretty solid thing. It's his smallest position. Don't think he's gonna particularly go wrong with that. But back up to S&P Global. That one, actually, it's interesting because it's not a super undervalued company or anything like that. But I think he's willing to pay the premium because they do have such a big moat and they're in so many things, so ingrained in the financial sector. And I think just the moat plus the potential growth prospects over the long term make that a pretty attractive company for him to probably just dollar cost average into periodically and not really worry too much about specific valuation with that one. Overall, I know a lot of people may view this portfolio as really risky because of how concentrated it is into MPW and PayPal, but at the end of the day, these stocks are pretty grossly undervalued. And, if you want to hear what Jordan thinks about this in real terms, on real time tonight, come on and watch the Cashflow Kings live show at 8 p.m. Eastern time. I will link to that in the description, and we are going to have a live panel discussion on MPW. And you can find out for yourself why he invested so much of his portfolio into this hospital landlord. It's really going to be an interesting watch, so I really suggest you tune in. Be there or be square. Now, when it comes to the portfolio itself, I'm going to have to give it a rating of 9 out of 10. I believe that he's got rational reasons behind every investment in the portfolio, and while there may be some way of improving, there's no obvious way of improving, so it gets a 9. Some would give lower scores due to the concentration or lack of diversity, but honestly, I think with a rational approach, this is a good score, a fair score. More diverse is not always better. And I believe that he puts in a lot of research and thought behind his investments. And frankly, I agree with most of them. If you enjoy portfolio reviews, make sure you like the video, subscribe to the channel, join my Discord, link in the description, be a channel member, and give me all that money. I charge a whole $1 per month. I know, I'm a cheap date. Now, also, make sure you're following me on Twitter /X at Mr. Macho Mog. I'm trying to get my first 100 followers. It seems to be difficult somehow. Maybe I just don't tweet enough. I don't know. Anyways, everybody, take it easy. And remember, watch us on the live tonight, 8 p.m. We're going to have a real rowdy discussion.